BTCI is paying you 26% a year. Your account is down 40%. One of those numbers is lying to you, and it's not the one you think. That's not a typo, and it's not a scam yield, but it's also not the whole story. Today, we're going through the real math behind BTCI's income, its price, and whether that combination actually makes sense, using the fund's own signed filings, not estimates. First, what BTCI actually is, because a lot of people have this wrong. It's not a YieldMax fund. BTCI is the NEOS Bitcoin High Income ETF, issued by Neos Investments, launched October 2024. It's a fund of funds, spot Bitcoin, ETPs, IBIT, and HODL, plus treasury bills for collateral, with call options sold on top, on Bitcoin futures and CBOE's Bitcoin index contracts to generate income. Here's the price context. BTCI is trading well off its 52-week high of $65.87, more than 50% down from the top, while the trailing 12-month total return, which includes reinvested distributions, is only down around 41%. Those two numbers differ because the distributions have been cushioning the decline, not erasing it. And to be clear, this is still a real liquid fund. Net assets sit north of $1.1 billion. This isn't a fund in a death spiral. This is the part most BTCI videos skip, and skipping it changes the whole story. The 19A1 notices, the monthly estimates, have shown 94 to 96% return of capital fairly consistently over the past year. That's what most coverage of this fund quotes. But a 19A1 notice is an estimate. BTCI has also filed Form 8937, the fund's own signed statement to the IRS, for 2 periods now, and the real numbers look nothing like the estimate. For BTCI's first 3 distributions, October through December 2024, the signed filing shows 0% return of capital, not close to the estimate, 0. Then January through May 2025, it jumps to 91.55%. Blended across that entire first fiscal year, the real number is 58.64%, not 96. And for the 7-month transition period that followed, June through December 2025, the actual filed rate drops again to 44.46%. That's not a fund quietly failing. It's the same lesson worth repeating anytime a fund only shows you its estimates. A 1901 notice is a monthly guess, and the only number that's actually final is the one the fund signs and sends to the IRS. BTCI's own prospectus hints at part of the reason. Some of its Bitcoin exposure runs through a Cayman Islands subsidiary, and income passed up from that subsidiary comes back as ordinary income, not return of capital. That's a plausible piece of why the real number swings this hard. I can't confirm it's the whole explanation, but it's disclosed in writing in the fund's own risk section. Here's what stays true regardless of any of that. BTCI's audited net asset value went from $50 at launch to $58.95 in May of last year to $43.97 by the end of 2025. Real audited numbers from the fund's own financial highlights, not an estimate. The price fell because Bitcoin fell. The tax classification is a separate question, and now there's an actual signed answer to it instead of a monthly guess. Here's the case for why this drawdown isn't unusual. In 2018, Bitcoin fell about 83% from its high and took roughly 3 years to reach a new all-time high. In 2022, it fell 77 to 78%. Again, roughly 3 years back to a new high, which finally happened in October of last year. Today's drawdown sits around 48% from that October 2025 peak, meaningfully shallower than either prior cycle. If the pattern of shrinking drawdowns holds, this one is on the mild end of Bitcoin's history, not the extreme end. This is the part I actually built a model around, using BTCI's real current option positions, not a guess, an overlay-informed projection off the fund's July 2026 holdings. At $80,000 Bitcoin, the model puts BTCI around $35.95 a share, with roughly $9.53 a year in distributions. At 90,000, about $40.45 a share. At 100,000, $44.69, with distributions near $11.85 annually. Those three levels track close enough to a straight line projection that I'm comfortable stating them with real confidence. The fund's monthly cap barely bites at that pace. Above that, it's more honest to speak in ranges. At 125,000, the model lands around $51.44 a share. A real haircut versus the naive math, because the written calls start actually capping upside at 150,000, $58.18. 250,000 is a single, more speculative scenario, not a confident number, and 500,000 or $1 million Bitcoin. I'm not going to pretend a model built today can tell you what BTCI looks like at that point. Those stay as wide, honest ranges on screen, not predictions. This model is a real part of why I'm personally comfortable adding to my own BTCI position here at today's price, instead of waiting for confirmation. If the recovery plays out anywhere close to that 80 to 100,000 range over the next several months, the math works in my favor at this entry point. That's not a promise the model is right. Models run on assumptions, and I've flagged exactly which ones matter. It's the actual reasoning behind my own decision, not a hunch I'm keeping to myself. There's also a volatility angle worth a mention. Covered call funds like BTCI earn richer premiums when implied volatility is elevated, and Bitcoin's volatility index moved back into an elevated range in mid-July. I can't confirm today's premiums are actually richer than at BTCI's own October 2024 launch. That comparison isn't something I could verify, so take this as elevated versus recent weeks, not the best it's ever been. Now the uncomfortable part, stated plainly, dollar cost averaging into a covered call fund whose NAV is falling with Bitcoin does not protect you from further downside. The option premium softens the fall. It does not stop it. And BTC, a structure, caps how much of a sharp recovery you actually participate in. You give up part of the rebound in exchange for the income collected on the way down. If this drawdown ends up running closer to 2018 or 2022 territory, 77 to 83%, instead of stopping near today's 48, BTCY's NAV has real room left to fall. NEOS's own disclosures explicitly refuse to call these distributions yield, income, profit, or investment performance. That language exists for a reason. A high distribution rate is not a guarantee of anything, and neither is a model. Buying a dip that keeps dipping is a real risk here, not a disclaimer to rush past. Where does BTCI sit against the newest competitor, BITA, the iShares Bitcoin Premium Income ETF from BlackRock? BITA is cheaper, 65 basis points against BTCI's 99, and targets 15 to 25% annualized with a current yield around 12%. Well below BTCI's 26. It holds spot Bitcoin directly plus some IBIT shares and sells calls on a smaller slice, 25 to 35% of its Bitcoin exposure, each month. The real trade-off is genuine, not a verdict. BITA's partnership structure means a Schedule K1 at tax time instead of a simple 1099 DIV, potentially better deferral mechanics, but a more complicated filing. BITA also only launched in June of this year. It has no track record through a real drawdown yet. BTCI has 21 months of actual data, including the Form 8937 finding we just walked through. I couldn't confirm a current asset total for BITA, so no number goes on screen that I can't back up. So here's the honest one-line version. BTCI's 26% yield is real option premium income, but the actual filed return of capital math swings much harder than the monthly estimates let on. And the 40% decline is Bitcoin's decline, lightly cushioned, not the fund quietly failing underneath you. Quick disclosure, stated plainly since I've referenced my own position throughout this video. I hold BTCI personally, and I'm adding to that position at current levels, for the reasons walked through above. That's my decision for my own portfolio and my own risk tolerance. It is not a recommendation for yours. This is not tax advice and not investment advice. Consult your own CPA and do your own diligence before making any decision here. Drop a comment and tell me, are you in BTCI, BITA, both, or neither? Subscribe if you want the follow-up once the full 12-month ROC picture and a real BITA asset figure are confirmed.